question, were you able to go through my lectures, and where do you stand now? How far, and what could I cover that can really make a big impact in this session with us?
Okay, yeah, I did. I went through all your lectures, and they're very, very good.
Okay.
I'm sure I will do them again just because.
Sure.
Two areas. The best, we covered the emerging markets so well on Tuesday. Thanks so much. I would say
sure.
I need to get started raising money, is very important, of course. And then the second thing, maybe a little bit of time on your Excel spreadsheet, how you analyze the property.
Okay. I would love to. I would love to.
Those two things would be very helpful.
Okay. Oh, super, super. Now, have I sent you the sample of the Excel worksheet so that you could work on it yourself, or not yet?
Not yet, but I don't believe so.
Okay. I'll just send it right here.
Okay.
Vinney. Yeah, you bet. Excel, underwriting, and then we'll go into one of them already filled in, kind of use it as an example, and then we'll go from there. How is that? That'll be great.
That would be just great.
Okay. Fabulous. Let me go here. Everything is all over here for me, Everything is in Dropbox. This way it syncs very nicely with all my laptops. I have 3 laptops, Mac Pro now I just bought, my iPad and my iPhone. So I can reach my everything on all these things. That's one thing I love it, Now these are my acquisition folder. And I started buying these, in this new company. So first property, second, third, fourth. I just like to keep it in systematic way so that I'm all together. So I bought 10 actually in 2 years, and then I'm buying these 2 right now for $23 million, So we go at the bottom here is my underwriting. There it is, underwriting right there. And I'll send you anything you need, lots of things I put together. So this is over here. Just 1 second.
Yes.
So this is the one right there. There it is. This is the worksheet. And let's make sure this is the right one. Happy apartment. Happy apartment worksheet. So this will give you everything, how to get started and everything. And we're going to go over worksheet. I'm going to just go ahead and take it over here and take you to the top. Just like this is right here, right? Happy apartment, home's name, and you write down the name, you write down the address of the property, city and state are like that, right? And then take this off. And then, let's see here, I'm going to save it. And then you write down the property name, number of units, how many, what's the strike price, and the price per unit. These are all formulas. They're going to calculate that. And then you write down, this is just to show you what example it is. It's what type of the building in what area. It's a B building in a area, what year it was built, all that, LOI price is a letter of intent price. Yeah. And then all these numbers, what you do is you actually don't fill these numbers. They come to you from the rent mix. So you go to the second page first. You start putting down efficiency, if there are 1 bedroom, 2 bedroom, 3 bedroom, what's the total number of units, how much is total square footage, and what's their current monthly rent they are charging. So all these formulas will populate by themselves, and then you also, now over here, see, I just wrote a few things in there to look and write down, 100% tenant base is very well-to-do, rich. 100% is very well, or this percent is less than that. This percent, cars were new when you did the inspection. If the cars are nicer, it means nicer profile of the residents, Actually, I don't say tenants anymore. We have used the word now resident. So it's good to say resident. Yeah, that's the new terminology, So resident is a better word there. I should change.
Oh, it is. That's a much better way to describe our client base.
Yeah.
So.
Yeah, clientele base, you bet, And then the thing is, then you'll see assumptions. You could do the assumptions. A lot of these comes automatically when you put them in there. All these will populate. And then one thing we look at over here is we look at what will be the cap rate, what we are buying right now. It will calculate.
Yep.
But then you want to see what's the cap rate at resale. And it should be about the same or a little bit less than what you're buying at, as long as, people are able to, if the area is growing and things like that,
Right, yes.
And then comes the 5-year projection. Now, that's the big one. Look at this here. In this one, it actually populates the first year, second year, third year, fourth year, right from the underwriting. It takes it from here and then populates your 5-year, but then you can change the assumptions of how you want to do it by per year, assumptions of rent growth, per month, vacancy, concessions, lease to loss of lease, non-revenue units, utility reimbursement, potential. Everything is, taken care of in this formula.
Right, yes, I see.
Then,
wow.
And then you go here to look at, okay, what is going to be the return to the investors? How they're going to make, you will make so much and then they will make so much, Now, I don't know why this, the 12% is coming somewhere from here, I think, from the equity on resale. But let's take a look at it. I think, oh, that's where it is. Maybe I didn't take out all the things. That's why it's showing those numbers,
Right.
Like I just kept that 25,000 here, and that made it 60%, net equity cumulative, which is a formula. So if I take it out 0 here, probably, then it's not going to make it any. See, let's just say 0. See, everything went to 0 now, right?
Oh, yes, right.
So,
yep.
Yeah, So maybe that is a better way, because then it will populate, as you, oh, wait a minute now, this initial investment, should be, my bad, it should come from underwriting. See, initial investment should be this amount right there, total acquisition fee. So that's what was 25,000. No wonder.
Okay.
That's why it was. So actually, I'm not going to mess it up. We could just actually, this number 3rd year, initial investment will stay the same. So all these numbers should be just coming from here, and then this, because that number is not going to change at all, it's going to be the same.
Right.
What was, And then 5th year, underwriting. See, it's bringing that underwriting L33. So it's probably bringing from underwriting L33. See, also it's good to understand the formula. So L33, which is exactly what it was. Remember? L33, if you look over here, L there, and then 33 down there. So this is the same thing. So we'll just take this. Now, we could keep it from there, or what I did, I just took it from here, like this.
Right. Yep.
So everything came, right from there. Now, when you say less initial investment, it has to be less because you have to deduct it from the owner's equity. So that's what we need to do here now, to just put, I think we could do it like this. I don't know how I did that, but wait a minute. No, if that is the maybe we have to multiply by minus. I'm trying to remember now. What did I do? But maybe if I don't save it, I'll know. -1. If we do -1, would that do it as minus?
Well,
they did.
Oh, there we go. Perfect. Okay.
Yeah, yeah. So it did work, you know. Yeah, right there. And then I do very nicely here cash flow returns, which come out right there. And then acquisition expenses right there, you know, how much we need. Then mortgages right there, acquisition and all tables are all there, you know, connected
Oh, wow.
to
Yep.
calculate the table. So it's a pretty comprehensive worksheet. So we just kind of start with one filled in already. That would be a good thing to do. And so this is the one which I'm kind of sending it to you, and I'll send it before even we do anything. I'll just click here, and you are getting it right there. There you go. And then, you know, we have a lot of other, you bet, my pleasure. And let's just go here. I went through, oh, no worries, okay. Right there, let's go to underwriting on Riverside. I just had a call with somebody else, New York area, and I opened it up. So this is filled in. Actually, I just came into this property pretty quickly, you know, like in December. When I say 16th of December, and then now we got it under contract and everything, and it's in a new emerging market in Atlanta, you know. So what we did was, just like I just showed you, you put down the address and everything.
Yes.
And all this and all that. First thing I do to be, as soon as I get a property, this was an off-market deal, and the broker actually sent me a text, Vinney, are you interested in this place? And I did Google. So any property you buy, you got to do Google first right away. Yeah, you got to do it so that you can make sure that, you know, it's in a good area and things like that, all that stuff, you know. Yeah, it's good to do, you know, underwriting. Before even you start digging into numbers, you really want to see if this is a right neighborhood to get into, you know. If this makes sense to you to, you know, really spend more time understanding the property and all that stuff, you know. I mean, it just takes you a long time. So let's see here. This is brochure, by the way, you know, because it's a syndication deal. So I put this together, and this is the property and all that. So I'll just kind of take you through a little bit about the map. So once I did the map, I came across, you know, this thing over here. Look at this. This is what I like to see. See, when I did the Google map, I came across these things in this property, you know, just as an example, right? So I looked at, this is the property right here, but then I knew about this area quite a bit. It's a new growth area of Atlanta, and a lot of different things are coming up. Lots of different things are happening around this place. And I know another syndication group that they are buying this complex right there on this side.
I see. Yep.
Yeah, for $66,000 per unit. 66,000.
Wow, that's like almost twice what you're paying. Oh my goodness.
I know. So that's why, you know, it's good to find out, and that's what. But you know, I think today's our thing we are doing is underwriting. So I'm going to confine myself to only talking about the underwriting numbers. So what we did, first of all, is that we started working on, after we put the name and everything, all that, and the units, you could put the number of units, purchase price, you know, what the buyer was asking was 40,000, seller was asking 40,000 a door. So I just put that, you know, there, and then we went to this place right there, rental unit mix. Now, that is important, very important. You take the rent roll from the seller, and then you put down every single unit, everything, every floor plan, how many units are there, how much square footage is there, how much monthly rent is there, all that stuff, right? Then this will populate the rent per square foot and also the rent per month. right there.
Okay. I see.
And then annual rent. Yeah, right there, annual rent. And then you look at also what will be the potential. Monthly rent is this much. I know it's a badly managed property, and I looked at rent comparisons, that the broker provided me when I asked them. Then I just put down $100 more, just $100 more as the market rent. If I could bring them to $100 more per unit, everything, I will get $320,000 gain in rental income.
Wow. Yeah, that's huge. Oh my goodness.
That's huge, But actually the upside is almost $175. So I only took 100, but the upside is high. And the reason I wanted to kind of, take you back here again. So over here, let's just go down here to see where the rent comparisons are. Rent comparisons are right over here from the broker. I didn't, do anything. I just asked them to give me that information. So we'll go here, and that's what you want to do. You want to make sure that you are getting these things from the broker, and they give you these kind of charts right there.
Yeah, look at the upside potential. It's way under market. Oh my gosh, but it's poorly managed. Probably behind on maintenance a little bit. Yeah.
Right. Look at this one.
Oh my goodness, you're not buying it, you're stealing it.
I know. Look at this. I can't believe it.
Oh my!
I just can't believe it. It's very much underperforming around the properties. So that's why I'm saying by putting $100 more, I'm still way under in my projections. So it's good to be conservative. I'm just one.
I would say that's conservative. Yeah, that's wonderful. Wow. Yeah.
So then you go back after you fill this whole thing. Then you come back to the underwriting, and now you're able to start putting the things for seller P&L. How much are they collecting? What's their occupancy? What's their concessions? All these are real numbers from their P&L. All these are their numbers. Now, once you do this seller side, you want to take care of your side. I call it as ours.
Okay, right. Yep.
So what's our side? And this number is coming from the rental mix already right there. If you look at it on the top, see right there? It's coming from there, right there. And then we got the physical vacancy, and then the concessions, if there are any. I know I'm going to reduce them down, so I'm bringing them down here in my calculation, because when I operate, we're going to be putting things in place to get this down, and the loss of lease will be reduced down and all that thing. And then we have higher numbers for utility reimbursements and the other incomes that we're going to get, from the, clothing, laundry machines and things like that. Now, this is a very, very important point over here. $216,000 will be the taxes as compared to $63,000 that the seller is paying. See?
Oh my gosh, boy, has he owned it a while now? Jeez.
I know. Wow. He bought it like 5-6 years back, from what I can tell. And, properties have gone higher. I don't know what he's paid then, but this is the insurance, the repair and maintenance. And, there are rule of thumb also that will show you how much it should be. So it's right there on the rule of thumbs on the right side.
Oh, there we go. Okay. Oh, good. Thank you. I was wondering what amounts you used, but that's right there. Okay.
Yeah, right there, So then we come down here to, management fee of 4% or 5% depending on marketing fee, utilities fee. That's a huge part, utilities, and then contract services and payroll and everything, right?
Right.
So then now this is the seller. This is us operating it, but now this is the loan side. So you got to really look at this side. how much percentage loan we're going to get, right? 20%.
Yep. Okay.
And then the down payment, mortgage, and then it has a built-in formulas for the mortgage. So when you put 5%, it's going to calculate your annual debt service right there. And actually those formulas are in this whole worksheet. If you look after this one, partners, there it is, mortgage. See right there? Amortization.
Yes, yep.
So that is already plugged in, you know, and automatically it comes by putting the percentage interest rate. It comes, brings it over there, you know.
Right. Yep. Okay.
I'm just kind of expanding it a little bit, you know, just to show you there's a complete madness, you know, to all the numbers.
Right. Yes. Are you able to get like interest-only payments for the first year?
Yes.
Anytime?
Yes. Always. Actually,
really? Right. Okay.
That's my value play, you know. I asked my lender, loan broker, you know, you got to get me first year or even 2 years in a row of interest only.
Yeah. Nice. Okay.
You know, so that's why I asked them. I put the one with the principal and interest and one without. It's interest only. It calculates over here. So there is a difference of 170,000. Yeah, 170,000. You know.
Yeah, it's a big amount. Yeah, goodness, especially early on when you're making improvements and, you know, adding some of your value plays.
Yes.
Oh, goodness.
Yes. Right. So then we go down here. Now it's making sense. Now you look at all the numbers in a nutshell in this part of the worksheet. Is it making sense for us or not? Because total expense was this much. Total income minus total expense gives us the NOI. Then the capital reserve of $300 per square, you know, per unit. And then we got over here,
that capital reserve of 300 per unit, is that 300 per unit per year?
Yes.
Yeah, okay.
It is. Yes, it is.
And that's kind of so for year one, that 300 per unit would be part of your raise. Is that correct?
You know, that is so true. I'm so glad you said that. Look over here. I raised that money right there, capital reserves. That's $80,000 right there. First year of insurance, I raised there because you have to pay it in full at the closing. Then I also raised about 6 months of property taxes right there, 6 months. Then I also raised money for utility deposits when you transfer, you know, all the accounts into your name, take over. I put that in there. And usually in my acquisition fee, I charge 4%, you know, right there. So that's of the sales price. Then the loan points, you know, broker fee, I pay 0.75. And then many times, you know, there is a 1% origination fee. So you have to write that in there. And then you have to write the closing costs, you know, which is the lawyer fees and all the syndication, legal fee. I do put, you know, legal fee here also. But then this is closing costs, due diligence fees and all that, you know, phase one. You know, and assessment, I mean, appraisal fee, all those things are all lump sum, you know, there. So, and then I also see if I need to raise any money for renovations, you know, if the interiors have to be renovated to, you know, bring the nice residents in, I'm raising like 900,000 in this case, just for that also, 900,000. So total, I'm raising $4 million, you know, in this thing, and this still cash flowing very good. Look at that.
Wow.
I mean, 12.3% cash on cash. This is based on $4 million, by the way, not on 3.1 million. 3.1 million, if I don't raise any money for reserve, then this deal is very, very high, cash on cash. You know, I'm just thinking, I didn't do it, but I'll do it right now. Cash on cash was primary debt service 491,000, right? So
Right.
491, and you divide that by 3.1, 3.1, because, we 900 we took out. Oh my gosh, this deal is giving 15.83 cash on cash.
Oh my gosh. Wow, Vinney, your investors love you. Oh, yeah, that's fantastic. Wow. Yeah, it's really something.
And debt coverage ratio, and then this is kind of like,
debt
like
coverage 2.16. That's off the debt coverage is off the charts. Oh my gosh. Well, your lender is going to love you too when they see that ratio.
Yeah.
Wow. They say, Vinney, find some more.
Yeah. And then the cap rate, 8.7, percent. And then usually I try to keep 35% cash flow for managers. That's me, sponsor, and my partners. And then 65 I give to the investors. So that's what will be the shakedown, We'll give the investors 319,000. And then if you look at cash on the return on the equity partners, which are the investors, it comes to 7.98%,
Right.
Not bad. Not bad,
So do you give them sometimes, like in this case, 65 the first year and then drop down to 60 in future years?
You got it, So let's go to that one. This is kind of like the first year, right? So
right. I think I heard that.
I
didn't invent that. I heard that somewhere on your podcast or something that to make the numbers work first year. Got it. Yep. Okay.
You got it. See? So you said it 100% correct. First year it's 65%. Second year onward it's 60, 60, 60.
Yes. Yep. I see. Okay.
Right there, And
that's one of Vinny's little tricks.
Yeah, But this is a beautiful thing right here. This gives you 5-year projection how you're going to run the property, right? And if I were to kind of take it from there and, just bring it closer, it got all the assumptions on rent growth, first year, second year, third year. See, I put 10% rent growth, in the second year, because we are going to make some big changes and we're going to grow the rents and everything. And then I brought it down to 6 and 6, because there is such a big potential in this opportunity,
Oh, it's huge.
Yeah. And then we put the vacancy rate.
So on this particular property here, and you have what 900,000. Now, did you get a seller concession on top of the 900,000?
I surely did. When I did this whole underwriting, Gary, I did not know how my report will come out, right, from my due diligence team. And when I flew there, usually I see the property. In this one, it looked like such a great deal to me. I got it under contract in very quickly,
Wow.
And that's the right thing to do. And I paid $75,000 non-refundable at the signing of the contract. Yeah, signing of the contract. Because the seller wanted to make sure that I'm sincere about it, and I was.
Sure.
So just to say that to you, to say that, when I flew there, we looked through, and even the broker went through 50 units. I didn't go through but 2 units. I did only 2 units. I don't go into the units. I let the professionals give me reports,
Okay.
So I paid $10,000 to the, due diligence team right there in Atlanta. I got a brand new team over there now. And I wrote a letter of repair allowance to the seller. And I asked for $600,000. I said this, like a big list, of things, and it's going to cost me $1.2 million. That's what I gave him. And I would love for you to come with about half of it to repair allowance. And I think he gave me 300. I said, no way, no way. So I negotiated more, and then he agreed to 450. So
wow, great.
now we
so
have
I see. $1,350,000. Yes. Okay. Yep.
Yeah. So 400 I negotiated after this whole worksheet was put together. So actually, I'll have 1.350 to put into this property.
And what are you going to do with that money? Do you have a kind of an idea or plan for this property?
I do. I surely do. So what we did was not in this one. This is one property prospectus, right? But let me take you to another one because we are buying two together.
Right.
Because I
saw
the investors. Yeah, if we don't do two together, then a lot of my investors don't like it. They cannot get into it, and then they feel bad about it. And so I thought, okay, let's just do two together. So this is the other property. This is the other one that we are also buying. And oh my gosh, what did I do here? Okay, we'll go here. And this is the whole deal right there, Atlanta package, This is what my investors get, by the way, just to show you. They get everything in this Dropbox. My investors get all the exhibits, formation. They get the company agreement. They get the subscription agreement. They get the investment summary on Riverside, investment summary on Autumn Hills. They get operating agreements and also the PPM, everything. And then I put together, my syndication attorney says this is sufficient, just the exhibits, but then I design these folders and I give my investors the rent rolls, the due diligence reports, and also the 5-year of P&L, I give everything for them to, look into. Yeah, the more the merrier. We run very clean operation, so I give them everything that I have, right there. So then I just want to kind of show you, okay, right here, there we go. It could be one reason, to be very truthful. I just realized it. But, it should not do that. I have another go-to meetings kind of getting converted. See, I just went over this one with another investors, from New York. Actually, he just listened to me, So he's not my student yet, but he wants to buy my course now after he met with me for a few minutes. But anyway, so I'm just converting this in the background. Maybe that's one of the problem, Yeah.
Maybe that's taking some computing power. Yeah, exactly. So
I think that's probably. I will try to get me more RAMs put into this laptop then. But this is the one I wanted to show you. You asked me some question, and the answer to that is here. That's why I'm showing you. By the way, so what happened was, this is the other property I'm syndicating along with the other one. And this one is a plug and play. Very nice one. You said it. I mean, they just showed it to me while I was there. They did not show me this before I left California. And I went there, I fell in love with this property. I really did. And they were showing me that this will be about $14 million or so. I negotiated it down to $12,224,000. The seller's note is due May the 1st. So he's very, very motivated. He bought this property 20 years back. So I'm sure he paid maybe $5 million, maybe, he's doubling his money, And it's 1986 built, and it's in a very growth area of the market of Atlanta also, by the way,
Oh, okay. Yeah.
So this has got some madness to it right there. We are delighted to offer blah, 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 blah. Let me see here if I make it bigger. You were asking me, what are we going to do for due diligence, right? And then what are we going to do value plays? So this is, we are combining the two. There it is. It kind of shows them, the investors, a little bit story about them. And then in Whisperwood, we will start renovating on Whisperwood as landscaping and curb appeal improved. Improve the interiors of the older units that need repair. All right. right there. So let me go to the next one. I'm sorry. Why is it not going down? Huh. Oh, maybe I have to go this way. There we go. Maybe like that. Okay. Make the leasing office more beautiful. New furniture and decorations. Make the clubhouse better. Build a cafe, just like other Monil communities. Get the breaker boxes repaired and covered. Breaker boxes. Repair the exterior LED lighting. Exterior. Get the breezeways repaired and painted. Get the exterior vinyl and wood repairs where needed. Buy appliances in units where they are needed, and make the clothing care center better, and get bids for double pane glass windows, if you do that and change and all that. But Autumn Hills is 100% occupied and totally turnkey, So that's what I did. So that will answer your question,
Yes. Yep. Exactly. Okay. Have you used? I saw somewhere where they sprayed on countertops on top of the existing, and God, it looked good. Did you ever do that?
Yeah. Yeah, we do it all the time. That it's much cheaper. You could get it done for $50 to $60, and it really lasts about a year or two. You have to do it again. And now there are some other materials, they look like granite, but they are not granite. Sometimes we go with that one for renovation, But we do have that other service, like you said, they put a speckle, on top of it, on the granite, on the countertops in the kitchen, We do.
Yeah, right. Okay.
Mm-hmm. And the good part is, once you are managing your own asset, you could really do some very good deals with the different vendors to make them preferred vendors, we call them, and they give you much better deals. Like, over there in, I don't know if I showed you my communities over there in the Texas area, right? I bought 10 over there. This is the one right there. I'll show you in a second. I think it's going to come. And this is the one where we have my webmaster from Pakistan, Rawalpindi, Pakistan. He charges me about $550 to $650 a property to make the websites, and then he designed. And we changed all property names. Yeah, we changed all our names. I like villas when I grew up in India.
Oh, I see.
I always liked the villas.
I see.
So these are all my
negotiator. You negotiate great prices and deals for everything. That's wonderful.
I like that. Why not? And that's money saved is money earned for my investors, I look at it that way. So these are 5 and 5, 10 properties I bought in the 2 years, in the last 2 years in Texas, and actually they're doing quite well. All of them are doing very, very well. And then this one is brand new. I just closed on Saban Villas, and then Avalon Villas in December. I closed on them. And
goodness! You are one busy guy. My goodness, that's great.
Now this property is worth this one. I don't know. Have I shown you this anything in this area? But we just concentrate on the underwriting. But I wanted to show you, like this property, the one which is called, oh my gosh, where did I go? Madrid Villas. This is a good one too. 107 units. The owner, I bought it for only $2,850,000. 107 units. Actually, they were 120 units, but then the seller converted 13 units to 3-bedroom units. So that's why.
I see.
Yeah, and this one, Albion, is my first acquisition I did 2 years back over there, and I'd love to show you. And this is my model property. Look at that, how beautiful it is. And it's worth now $11.7 million. I paid $8.7 million 2 years back. So $3 million. I know. And I increased the rents. I also increased, the build-back system. The sellers were not doing that. And I built cafes and everything. All my properties, I bring value. Monil communities, they are called, right? Monil community.
Okay. So this cafe, this is like a cafe inside the leasing office that you build, or?
Yeah, you got it.
Got it.
Yes, yes.
Okay. Yeah.
Yeah. See, you will see it in a second. They're going to come in. Just to kind of show you a little glimpse of it. I like to bring value to the residents, and then they don't mind paying more. They would love to live there, in a nice,
Yeah.
see, like right there. I don't know if they can be made bigger or not, but I think you'll see some. Maybe it's taking a little longer to.
Tan walls with white trim looks so nice. Gosh, it looks great.
Thank you. And that's where, this is the entrance to
beautiful.
the leasing office.
I see.
Beautiful property. Cafe, look at that there. So we have cookies
really nice.
And Keurig machines and all, and, and we like to really give good value. And the clubhouse, the media center, I do all that, in every property that we buy.
You do? Now, what's in the media center?
Okay, I'll show you. Media center is the all-in-one computers, computers for the residents to use. Like I was just going to take you to my, and then, my webmaster puts all our properties underneath each city. So we can jump into different cities, and it tells them that, Monil Management owns them, and then we are the ones who are managing them,
Nice. So, really nice. Yeah.
Thank you.
Well, Vinney, everything you touch, you just do a first-class touch to it. Really nice. It's so professional and first class. Wow.
I appreciate that. Now, this one, I really enjoyed buying this one. I bought it in 2015, February, so 2 years back, almost 2 years back. This one I'm just showing you. And the seller had put $3 million in renovations. It was a C-class build, C-class asset, but he put A-class renovations in them, So that's why I bought it. And inside, it's all steel appliances, all granite tops, everything, So just
did he over-improve it? Would you recommend what he did? Did he over-improve us from a C-class property with A-class improvements?
No, not really. Not really. Look at it. It's like a resort setting. Look at that. There's a creek going through there, and the rolling hills, the green.
Beautiful.
There, I just loved it. I fell in love with this one. And, I mean, they were also thinking about sending it to the, outside, to their investor base, like a, what did they do, email blast. And I told them, oh, no, hold on. And I bought it then within few days. I put it, it's a beautiful, and I changed the names to Terrace Villa. No, I wanted to show you this one because media, look at this here. That's the model. They look beautiful inside. Look at all the appliances. Very pretty. So they did a good job. This is my media centers. Look at that. Right there.
God,
so I buy these,
Yep.
And then cafes and all that. You'll see some other pictures. I think they'll come here.
That's really nice. Some of the tenants probably can't afford a computer or don't have internet access or,
Correct.
To come down and use this, print something out. Oh, really nice. Yeah. Good.
Yeah, exactly. So, and they put new landings, new roof, new balconies, interiors, all that. So I actually asked the broker to get me the whole worksheet of the repositioning. So they gave me 110 pages long worksheet.
Wow.
What they changed in it. Since you got to ask for it. You never should just leave it to chance. You want to ask and see how much they are able to provide you, And that will help you to look at. So let's just kind of wrap it up if we can. And, the big thing would be for us to, for you to get some practice going, right?
Yes.
Into this worksheet. Get some property, get it local or like that, do some underwriting. And then we could even do, be sure to do the police report, rent comparisons, code violations. All those things are important to do for as you are analyzing the property, you know.
Yes.
And then this worksheet will tell you whether you want to get into it or not into it. It's very, you know, you never should get attached to the property. It's the numbers you want to get attached to, right? You know, you want to really make sure that, you know, it's making a difference and you're able to do it. Huh?
Yeah.
Alrighty, Gary, my next call is coming at 9 o'clock. So enjoy the time with you. You bet, my pleasure. And I'll send you a recording also. See, I'm going to send you the recording to this one. And this way you can kind of go back and keep it on your laptop and, you know, look at my presentation to do your things.